welcome to the Biz Coach Show, hosted by my Biz Coaches and presented by the TLG Group. Our show is focused on giving entrepreneurs the edge they need to succeed. Your hosts today are David Macon, that's me, and Eric Whitmore. Eric, how are you doing today?
I'm doing great, David. Thank you.
Awesome. And today we're joined in our virtual studio by Jim Wilkerson. He's a coach with my Biz Coaches. Jim, how are you doing today?
I'm doing great, David. Thanks for having me.
Awesome. Hey, great to have you with us. And I think your background expertise are going to be perfect for some of the topics we're going to be discussing today. But before we get to that, I do want to mention, if you are new to our show, we do invite you to subscribe, whether you're watching on YouTube or listening to our podcast on one of our many podcast platforms. So be sure to take a moment and subscribe so you don't miss future episodes. So before we jump into our topic, Jim, you're new to the show, so I'd love to give you just a chance to highlight maybe a little bit of your background and experience before we get into our topics for today.
Okay, thanks, David. Yeah, I out of college, one of my first positions in working was with a Wall Street firm back in 1983. So that dates me just a little bit. And I was trained to go out and reach out to corporations, municipalities, cities, universities, and I helped them develop cash flow models and investment portfolios for spending. And what that corporate cash typically came from was from municipal bond issuance. So I would follow our muni bond guys around, and I'd meet with the CFO of a corporation or a university, and they typically raise that money for some sort of a project, a dorm or a new stadium or whatever. And they had a spending plan, and then I would build an investment portfolio for them to maximize the float. Now, back in those days, I don't know, you may remember, T-bills were 8.5%. And overnight money was 8 to 9%. So it was definitely worth doing. And so we were managing billions of dollars for corporations all over and municipalities all across the Southwest was our territory. And in addition, we would meet with the management teams of the businesses, the corporations we worked with, and help them with what we call corporate services. And that would be helping them facilitate insider sales that had to be basically handled properly, helping them with employee benefits, minimizing taxes, and then eventually, hopefully, in most cases, working with them on an individual basis as their financial advisor. I did that for about 10 years. And then as rates continued to drop and technology came aboard, they didn't need a guy like me anymore to do that. So I moved over into comprehensive wealth management. And my book of business basically transitioned into working with individuals and business owners, helping them with not only their investment management, but their risk management, their insurance planning, their tax planning, working with their other professionals, estate planning with their trust attorneys and things along those lines, as well as philanthropy. So that's a comprehensive wealth management platform. And I ran that business for about 14 years and eventually basically sold it to my partner and walked away in 2000 and I want to say 13, and took some time off and started doing some other things. And then an opportunity came up to help one of my good friends here in town. He wanted to scale his business and he needed some help. He'd never hired anybody to help him do it. And he was just so classic in terms of the type of clients that we work with and, that we see today. He didn't know how to do it. And so within 2 years, we were able to double his revenue. He was able to sell his business and retire with enough money to have a great life after that. And then I met up with Eric about a year and a half ago, started thinking about the coaching business and helping people doing this as a profession, working with individual entities out there. And now I'm with Eric and my Biz Coaches and happy to be here.
Awesome. Well, thank you so much for sharing that. And like I said, once I heard about your background and really bringing it to life here today, really the perfect addition to our show, as we're going to be talking about financial fitness. And one of the reasons why we picked this topic is, we're recording in February of 2023. And, start of a new year, people tend to focus on personal goals, fitness, eating right, but sometimes business owners forget about their financial fitness, and we want to bring that to the forefront really today and throughout the rest of the month. So that's going to be our focus. And I think just to kind of kick things off, interestingly enough, Jim, you talked about cash flow, and kind of the first question for our group and our audience today is, how can business owners stay on top of their finances and manage their cash flow? So any advice for our small business owners listening out there?
Well, it's not unlike managing your own portfolio for your own retirement. I mean, a corporation is basically an entity in and of itself. It has its own life, and that requires planning. It requires planning for contingencies that come up that you may not have planned for, having a backstop should something go wrong, and having a game plan. And where you can basically monitor all this and use as your scorecard is your financial statements, your P&L, your income statement, your cash flow statement, and managing accounts receivable and payables. The cash flow is critical. I mean, money is what it greases the gears of any business. And so should something come up and you haven't planned for it, you're scrambling for ways to make payroll on Friday. If you haven't done that, and you need to actually build that into the plan of what your goals are as well. How much do you want to grow? How much are you planning on spending? If you're a business that wants to scale, how are you going to do it? How fast are you going to do it? And all that goes into the planning that Eric and I do when we meet with the business owner.
Absolutely. Yeah. Well said. Eric, anything you'd add to that, just in terms of your experience in working with clients?
Yeah, no, Jim did a great job. The couple of things that I like to remind clients of is, for our audience, not assuming that everybody's an entrepreneur or a business owner, but one of the things that we find often is that when people get into business, they get into business to do, and I say this all the time, they got into business to do whatever they're good at, right? So, again, we work with a lot of service-based business. So if they're a landscaper, they're really good at landscaping. If they're a painter, they're really good at painting. If they're a roofer, they're good at roofing. They're probably not necessarily good at invoicing their clients. They're probably not good at collections. They're probably not good at budgeting for growth. And Jim brings up a great point when it comes to coordinating those resources, right? Because one of the things, and I had to learn that lesson the hard way with my trucking business. We grew in scale. We were the fastest growing privately owned trucking company in the Southwest U.S. And one of the challenges that I had was I didn't have enough capital to sustain that growth. We were growing too fast in a capital intensive industry where it requires a lot of money, a lot of constant managing cash flow. And when you're not getting paid for 45 to 60 days, that can be really challenging for the business. And you don't understand how to manage cash flows and don't have lines of credit to access. That's another thing that a lot of clients don't think about, to Jim's point, right? So factoring those types of things in is super important ahead of time. Because the worst time to need money is when to have to go and get money is when you need it. Right. You want to go out and get it when you don't need it, because that's when you're going to get the most favorable terms. Probably they'll be more accessible to you. When you actually need it is when it gets really hard to get.
Yeah.
Yeah.
Very true.
And I would recommend really most businesses should have a line of credit, whether they need it or not. Find a good banker. And do it when you're having your best year, when you have your best foot forward, and
exactly
have that bucket, because if it can save your day at some point.
Yeah, yep, absolutely. So I want to follow up on something you mentioned, Jim, which is managing your business finances, not drastically different from managing your own personal finances, but sometimes people struggle with that, right? And maybe that's not a strength of theirs. So I'd be curious for both of you, any tips or advice on, maybe a new business owner or somebody who's, kind of walking through this for the first time. How do they go about planning and allocating budget? So any advice for maybe that first time business budgeter?
Want me to take that?
Yeah, go ahead, Jim.
Okay. No, it's really, it's developing that plan, as we talked about, and analyzing your income statements and your P&Ls at least, on a quarterly basis, minimum. That's your scorecard. If you don't have those things built, find somebody that can help you do it, or we can help. We help people do that all the time. I can't tell you how many small businesses we run into that don't have financial statements because they just rely on their bookkeeper to pay the bills.
Yeah.
And when we go through their balance sheet, sometimes they don't even know that they're not making any money. So
right.
so those are really just the simple things. And like Eric mentioned about accounts receivable, it's easy for you to let your clients slide, but somebody's got to be monitoring that and getting on the phone and chasing down that money.
Awesome. Yeah, well said. Eric, any thoughts to add?
Yeah, and I think when you sit down to create your budget, one of the things you have to factor in, one of the many things you have to factor in is Jim referenced it, the rainy day fund, right? I call it the rainy day fund. You need to make sure you're setting money aside for that. Because right now, particularly if you're relatively new in the business, what happens is things are growing, right? And so each month you're adding new business, more revenues coming in, it's continuing to grow, and then there's a slowdown. And that is every business that's ever undone is always undone because they didn't see some kind of slowdown coming. COVID, we've talked about this before on this channel. COVID was one of those that nobody could have planned for, nobody could have expected, and quite honestly crushed a lot of businesses. Yes. Because they didn't, not only did they not see it coming, and you probably couldn't have seen it coming, but in addition to that, they didn't have the rainy day fund to salvage them. And quite honestly, as long as it perpetuated for, most people didn't have enough of a fund to be able to sustain for 18 months if they were affected that long. In Arizona, we weren't affected quite as long, but we had clients in other states where they were, in lockdown for, a year and a half in many cases. So, that's a big factor. So, the rainy day fund and projecting out sales, things like that are really important to look at it and say, what's your seasonality? Yes. David, in the wireless industry, we could predict within probably 5, maybe 10% max, what our numbers were going to be in any given month once we got to a certain level in our business in the wireless industry. So, we knew that December was easily going to be worth a 20 or 25% lift in sales month over month. And of course, when we got later in the years, if you remember that, as we got towards the end and Christmas wasn't as actually, I think we had a Valentine's year. One year, Valentine was actually a bigger month than Christmas. Yep. Right? Because it had pivoted, and I think a lot of it had to do with contract renewals and things like that. But ironically, we actually had a February that was bigger than a December.
Yeah.
Absolutely. Yeah, seasonality is a big thing to plan for.
Yeah.
Businesses make 90% of their profits, like a florist is an example. They
right.
make 80% of their money between January and the end of February, basically, for the whole year.
Right.
Yeah. Yeah. Great point. Well, just to maybe dive just a little deeper on that topic, as we're talking about, planning, allocating budgets, generally speaking, is there a certain amount of time that you recommend people plan for? So for example, is it, 3 months? Is it 6 months? How much should people be setting aside for those unexpected things? Maybe we're in COVID. I don't think anybody forecasted that lasting as long as it did, but maybe just a normal business, normal economy. What's kind of a general guideline for how much people should be allocating for that kind of rainy day fund, if you will?
I would say really for the whole year. 12 months out. You create a pro forma and a business plan that you want to, you're setting goals, right? At the beginning of the year, whenever your corporate year ends, and you want to be able to match that. And there again, if you got the rainy day fund, you've got expenditures, you're going to have 6 months out, and you see things changing, well, then you can stop and look at your balance sheet again and determine if you've got the cash to do what you need to do, or should you hold off. Those are all decisions that you have to make. And, as Eric mentioned, the business owners, so many of them out there, entrepreneurs, just trying to run the business all day long. They don't have any time to work on their business. So this is one of the things that we try and help these people out with.
Yeah. I think the other thing that Jim alluded to as well is that, a year definitely is the right number or the right amount of time to be looking at to answer your question directly. But I think the other thing, you have to be looking at it, if not monthly, at least quarterly, to see whether or not you're on plan. And like, for instance, if you set aside a year's worth of buffer, let's call it, I ultimately, I know our wireless entity before, David, the CFO's strategy was to always have 2 months of 2 entire months of operating income. so that if we didn't bring in any revenue for 2 entire months, and if you remember, but our payroll alone was north of $1 million for any given month. So we had a big chunk of money in the coffers, and that was literally zero revenue, despite the fact that we're making daily bank deposits. His intent was to always have that, and I think at one point we're actually as much as 90 days. Just because of the thing, unforeseen things that you can't account for. And of course, you remember we also started right in the middle of the 2007-8, right? We started in 2006. So 7 and 8 going through that economic downturn. It was a very conservative approach and probably appropriate based on the time that we were in.
Yeah.
Absolutely. So I think safe to say we're going to coin it a rainy year fund. Okay, you guys are both good with that?
Yes.
Okay.
I think that's the right terminology. I think you coined a new phrase.
Yeah, we're going to trademark it. You guys heard it here first. Episode 8 of the Biz Coach Show. So, awesome. Well, thanks for the insight on that. And I guess, maybe let's think about just for a moment the emotion that comes with that setback, whether it's, hey, I've lost a client, there's maybe a supply chain disruption, right? Things that we've unfortunately seen very commonly. Maybe let's walk through that for a minute, and I'd welcome your thoughts on it. You're a business owner, all of a sudden you're faced with this setback. Sometimes in that fear or panic, we make the wrong decision. So any advice on, hey, you're walking through this, all of a sudden you get smacked in the face with something unexpected. What should a small business owner do first?
Well, I would say seek outside advice from somebody who's impartial. I mean, you're talking about emotion, right? And so the worst thing you can do is make a substantial decision when you're in an emotional state. Typically, what you're going to do is wrong, almost always.
Yeah. Right.
So that would be my best advice. And if you've got some counsel, if you've got a good accountant, CPA, bookkeeper, attorney on staff, good friend, family member, just ask for a little outside advice and take it all to heart.
Yeah. Awesome. Eric?
If I would add to that, it's when you get hit with something like that, to Jim's point, it's super emotional. And I know, going back to my wireless days, with my first wireless business, was at 2003 to 2006, right? So when we were growing that business, it was super difficult because I literally wore all the hats. And because I had helped a previous company grow to $100 million, I was like, oh, I can do this. I got this, no problem. And one of my challenges was, I was the CEO, the CFO, and the COO. So I would literally have my staff meetings, and I would sit there and I'd be like, okay, CFO, can we afford to do this? And Mr. COO, can we execute on this? And then the CEO would say, okay, let's go ahead and go forward with it, right? So I mean, it was a little talking to the angel and the devil on my shoulder, basically, if you use that analogy. But the challenge is that I was making less than desirable decisions without really confiding in somebody who could give me guidance. And put emotion aside, just literally trying to make all those decisions on my own, and then have the emotion of something dramatic happening at the same time. It's not even I'm just reacting. I'm not thinking strategic, right? So I think it's actually, having personally gone through that, I think it's almost crazy for a small business owner to try and do that on their own, right? And to Jim's point, seek counsel, seek wise counsel. I would say that my biggest caution is, and I've said this before as well, be careful where you seek your guidance from, because sometimes people not knowing, and let me add to that. My concern would be that often proud people are slow to share how things really are. They don't want to admit that they're struggling, right? So they don't give the entire story. And I would think Jim would agree with me. One of my biggest frustrations is if you don't tell me the whole story, if I don't have the whole picture in front of me, I can't give you good advice. If you give me watered down insight as to where your business is at, if you're struggling and you're not giving me the full picture, I can't give you the best advice. I'm going to give you the advice based on the information I have in front of me. And so that can be a challenge if somebody's not being open with where the business is really at. And that's why we like to do those deep dives and truly understand where the business is, because that can be a big deterrent.
Yeah.
Yeah.
And as we sit with the client who's wanting to scale their business as an example, and we've done our deep dive, we've got some plans in place. Everything can change, and having somebody like us in your back pocket to sort of be there for you is really part of the value proposition that we bring to the table as coaches, because we care. We want to make sure that everything goes smoothly. We want to be successful.
Right.
Absolutely. Yeah. Awesome. Well, great advice. Let's maybe shift gears a little bit and move away from, the setbacks. I think great insight on that. Let's think about, both of you coaches, you're working with businesses day in and day out. What are some of the, maybe top 2 or 3 mistakes collectively you see businesses make when it comes to managing their finances?
Well, when you look at the balance sheet, there's only really 3 things you can impact, and that's your revenue line, your overhead line, and your cost of goods sold line. And so by analyzing that on a regular basis, there's always going to be changes that you can make. And so those are the only places that you can impact your, where you are. So that's what you have to look at first. There again, it's back to blocking and tackling. It's nothing fancy really, but it's just being diligent enough to do it. And, having somebody that can help you if you don't know how.
Yeah. And interesting, right? What I'm hearing you say too in that is one of the mistakes people make is they don't check their financials enough. And so I think that's a great, set a calendar reminder or, have somebody on your team that you sit down with once a month, coffee, lunch, whatever, and pour over those. So I think that's it's a great call out. Thanks, Jim.
Yeah. That business that I helped scale, I was telling you about earlier, the business owner was in charge of managing the accounts receivable, and he gave it to somebody to do in his office because he was trying to move away from doing all that. And he had a couple of big surprises that, how can you let this one go for 90 days? How did that happen? So there again, it's just a matter of staying on it.
Yeah, right. Absolutely. Yeah.
Yeah. And again, I just say that that's not often what the business owner, an entrepreneur wants to be doing. So delegate appropriately, right? Because delegate. What's the famous phrase by Ronald Reagan? Trust but verify.
Trust but
right.
verify.
It's like put somebody in charge and then double check their work. Because when it comes to your money, I mean, how many countless athletes have we heard about that made tons and tons of money and have nothing to show for it 10, 15, 20 years later because they trusted somebody else but didn't check their work. Right. Mm-hmm. And then, and you need to delegate somebody that because the talent can't be the one that's doing everything. But at the same time, you can't just unreasonably trust, what's the word? Strictly on faith. If you do it that and you don't double check it, then, I'd love to say that how many partnerships, Jim, have we seen that have been dismantled because one partner trusted the other partner and the other partner took advantage of the situation.
Yeah, it can be tragic.
Countless. Yep. Yeah. So, I mean, that's a big piece too. It's especially when it comes to money, because the other thing, and I know we've had this conversation before, money makes people do odd things. Yeah. Even the best people.
Yeah, absolutely. So check it often and be thorough is kind of what I'm hearing.
Check it often and be thorough. Yes, there you go.
It could be mistakes or it could be something more.
That's it.
Right? Yeah.
Yep.
In fact, oddly enough, we had I think 2 days in a row. So in Utah, we had headlines about these embezzlement things. One was a charity, one was a private school. So I mean, even places you think, well, it wouldn't happen there. It happens there too. So it could definitely happen in your business. So keep a close eye. It's your money, right?
Absolutely. Well, I think I've shared before. I have a client that on 2 separate occasions had an operations manager stole hundreds of thousands of dollars from their office.
Wow.
So they trusted an operations manager, got burned, had a second operations manager, by the way, was a family member and got burned again. And we couldn't verify the total amount lost, but it was hundreds of thousands of dollars over a period of time, years.
Yeah.
And that's the worst part, because it's so incremental over a period of time. and it's in a scenario where it comes out just a little bit, and you don't notice it, and adds up to a lot of money over time.
Yeah.
And I think we talked about making a plan. Don't be afraid to change your plans. That's the other thing. You have to be able to adapt.
Yeah.
Because that 1 year plan we talked about is probably going to change half a dozen times during the year, depending on the economy, your particular space, personal things, like something like that happens to you. How do you recover? So there again, that's just not being afraid to change your plans if you have to.
Yeah. Awesome. Well, great perspective. I'd be curious, as we're talking about, avoiding mistakes, checking our plan often, right? Really being thorough. There's definitely tools and resources that can help small businesses do that. So any recommendations on, maybe again, targeting this to maybe that small business or, maybe a medium-sized business, somebody that's growing, they're looking to scale. What are some of the tools and resources available to that business owner to help them manage their finances more successfully?
Well, obviously some kind of software, accounting software is mandatory. I mean, it's so inexpensive to get QuickBooks now or something along those lines. And that can actually help you create your financial statements. That's kind of a no-brainer. Beyond that, Eric's probably knows more about that than I do.
Yeah, and certainly the to his point, the accounting software is super important. I go so far as to suggest using payroll services. Not necessarily, like an ADT or something like that, but ADP, but something similar. There's a lot of really good companies out there today that are digitally based. Great support mechanism, and the beauty of that is you don't have to worry about reporting your taxes. Of course, if you don't have any employees, that's not necessarily an issue. Even if you're an LLC, I mean, that we could get in. We can't give legal advice, but you get into entity structuring and things like that. That's super important. So for instance, if you're an LLC with an S corp status, you got to make sure that you're giving yourself an actual salary every year as an employee of your organization. So you need to make sure that you're structuring it, and that's not something I wouldn't want to have to manage that, quite honestly. So better to use, a Gusto or something like that, where they do the payroll processing for you. Even something like that is really good. There's a number of really good accounting softwares. You got QuickBooks. There's also Xero and a handful of others that I would definitely take a look at. If you have somebody that's really adamant that QuickBooks is the way to go, then that's your best. Whatever you're going to use. that was the best advice I got from an accountant. They said, whatever software you're going to use is the one that I recommend.
Right.
If you're not going to use it, it's not going to do anybody any good. So whatever you're going to use that. So to your point, David, I mean, one of the big important things is to make sure that there's a resource in place and you're utilizing it, because to Jim's point, it makes reporting so much easier. It allows you to corroborate your data. You wouldn't be able to go back and look at seasonality if you're not tracking that kind of information. And then, that's just high level financial accounting. There's also what's the other term I want to use? Managerial accounting. So you have financial accounting and managerial accounting. Managerial accounting would be more appropriate to, what cost, job costing for like painting or something like that. A lot of service-based businesses. I need to know what it actually cost me to do a job. And it's really easy to say, it costs this many gallons of paint and, this many labor hours, but actually figuring out what it truly costs to do a 3,000 square foot home, 5-bedroom, whatever, right? And know what that actually costs, because when you back into your pricing, how much you can give up, what your margins should look like, that you can operate on those margins. There's a lot of things that most business owners don't have. They just go super high level. They say, hey, my competition is charging this price, and they just charge that price. But if you have the right kind of software, you can go back and you can calculate that. Because one of the main things that I like to promote is you want to know what your two things that I would recommend. You want to know your lifetime value of a customer. So, which you can gather that from going back and look at sales rates and how much revenue they're bringing in. And then the other thing is what's it cost to acquire a customer? Which, when you factor in your marketing dollars and apply that against the revenue you're bringing in, and then you can kind of match the two up and say, okay, I know that it cost me, $250 to bring in a new client, but I'm making $1,500. Well, that's a 6-to-1 return on your marketing dollars. That's a pretty good return. If I could do that every day, all day long, I'd be doing it all the time. how can I get more $250 clients all day long, right? But you can't do any of that without the right kind of tracking.
Right.
So it's super important to digitize and automate all of your reporting and revenue capture numbers.
Well, to Eric's point about the marketing side of it too, I mean, most people just think that they go out, I just need to spend more money on marketing. And they go out and hire a digital marketing company and they talk them into spending all this money and they don't have any idea what their ROI is going to be in most cases, almost, well, every case. And as far as in my experience has been, and without knowing that lifetime value of the customer, you're flying blind. And so, knowing how you can do that and how much you should spend to grow your business, because everybody wants to grow their business. And that's the first thing they think about. Well, I got to get more leads. I got to get more conversions. How am I going to do it? Well, let's upgrade our website. Let's do some SEO there. Let's do some digital marketing. Let's put out some email funnels and automations to try and get people to build a list, to nurture, that sort of thing. That takes time and it takes a lot of money. And really, there's so many other things you can do as a business before you do that, like looking at your pricing, looking at bundling products, making specials for people, giving them no risk offers, those sort of things. There's a dozen things that we can talk about before you do digital marketing. And in our Jumpstart 12 that Eric mentioned earlier, when we go through our assessment, that's like the last thing that we want to try is spend money, because what do you have to do is you have to raise your revenue. Your revenue has to increase to get the money to do the digital marketing. So looking at all the other areas of ways to generate more cash flow, more profits, and more revenues is that's sort of the methodology you need to have in mind.
Yeah. Awesome. Yeah. Great insights. And I think just as I'm thinking about tools, software, resources, kind of looking back at something we talked about in our episode 7 show was, really looking for things that are going to push the information to you, right? So again, we're talking about time savings. We're talking about frequency of review. So if you can have, those automations that push financial reporting to you, you don't have to pull it or, heaven forbid, type in a spreadsheet, right? So it just sends it to you on a regular basis. That's amazing. And I think even more than that, if you can go mobile, right? We all carry these around every single day. So if you can get one of those software platforms that you can pull up all that information, have a quick dashboard of your business in the palm of your hand, that's going to make it that much easier to stay on top of things. So there'd be 2 things I would definitely recommend.
Yeah. I'm going to add something to that, David. You make a great point, particularly on credit cards. First of all, I'll mention this. You remember the movie with Leonardo DiCaprio, the Catch Me If You Can? Yep. So the movie that was based on, and I can't remember his actual name, the individual. Don't recall his name, but that guy, the whole movie that was based on, he became an advisor. At the end of the movie, it tells about how he went on to advise for a check writing company initially. I can't even remember the name of it. I knew it at the time, but and now he consults for a number of major organizations about cyber theft. To this day, he still consults on that. And he had done a speech. I can't remember who he was in front of at the time, but he was talking about technology. And what he had said was he doesn't carry a debit card. He refuses to carry a debit card. And he says that that and now this may have been dated slightly, a handful of years, but he would only carry a credit card because a credit card would guarantee the transaction, whereas a debit card, if somebody does fraud and steals from you, you could play days and even weeks sometimes getting your money back. Whereas if it's a credit card, they'll cancel it initially, cancel it immediately, do their investigation. All the while, you still have the purchasing power that you had before. And so I bring that up because I think it's super powerful for businesses, because a lot of businesses don't have business credit. So we talked about a line of credit, but another important component is a business credit card. And I'll go one step further. You're segregating your personal credit from your business, which is super important when you're talking about financing. But in addition to that, using the tools and resources, most of those credit cards have really awesome tools for managing your spend, which is a relatively newer thing of the last 3 to 5 years, I would say. So ironically, using a credit card not only enhances your ability to, reduce theft, fraud, or at least reduce your exposure to fraud, I should say. But in addition to that, it also helps you in the way that you spend your money because you're allocating funds that are maybe not coming directly out of your bank account. You're giving yourself, because as long as you pay it off within 30 days, you're not paying interest on it. So you use the bank's money to purchase what you need to purchase. You pay it back within 30 days. It costs you nothing. And oh, by the way, it gives you some really nice reports that manages your expenses for you and shows you how it's allocated. And you can actually incorporate that. And then usually it's a super easy feed to take it from your credit card into your QuickBooks or whatever digital accounting software you're using.
Yeah. Awesome. And I did look it up, Eric. It's Frank Abagnale Jr. So I did. I wasn't on the tip of your tongue, but I looked it up for you. So
appreciate it.
Yep, no problem. So yeah, that's great, and just a great way to eliminate some risk too, right? That's one of the things we're talking about with setbacks and rainy years, right? So if we can minimize some of that risk, or at least the headache of trying to recapture some of that, if fraud happens, certainly important. So great perspective.
Right.
Awesome. Okay, well, I think we covered this one. I'll just open it up in case there's any other thoughts on it. But Jim, you had mentioned line of credit. Eric, you just talked about utilizing credit cards. So what is the role of financing or credit in growing a small business? So any thoughts on that and how we leverage that in a responsible way?
Well, you use the word leverage. That's exactly what it is. And there again, it goes back to having a specific objective. What are you trying to accomplish? And you put an estimate to it, but that's really all you can do. If it's well thought out, you can get pretty close most of the time. But there again, it goes back to that plan that we talked about.
Yeah, absolutely.
Yeah.
Credit's just a good tool that you can use to as an extension of your plan. To Jim's point, so if you're budgeting correctly, it allows you for that buffer. If you fall short, or if there's an unexpected expense that comes up, it allows you to do that. I've seen some really creative small business owners, particularly where they are able to leverage the points that they use. Or, like you take a really good rewards card, like any of the Amex cards typically, or so Capital One's got some really great rewards cards. You leverage those and take that money. What you do, again, I can't give you advice on a text, but if you take the revenue that you get from the money that you get, from the banks on your rewards, and you have it reapplied to your credit card statement as a part of a form of payment, you don't pay taxes on the money that you get. Whereas if you took the money directly as a payment, they'll issue you a 1099 miscellaneous, and you'll be required to pay taxes on the money you took. However, if you took it and then reapplied it to your credit card statement, the money that you receive isn't taxed. It just goes into your bank account and pays down your balance.
Yeah. Well, that's one area we haven't really touched on much here today, and that's a very big part of it is taxes. Tax savings strategies, from an individual standpoint, to the corporate standpoint, there's dozens of ways to go ahead and mitigate your taxes by implementing things. One thing I've utilized when I was in the corporate services business is using, for example, a non-qualified deferred compensation plan for the key executives. They're able to put money from cash flow directly into their for them at some point when they're ready to retire. And it accumulates and it reduces the tax burden on the corporation, as an example. Anytime you can take money and get a tax benefit within the corporation, you need to do it. And of course, HR is a whole other issue with having IRAs and Roth IRAs for yourself and your employees. Those are all ways to help mitigate that.
Yeah. And a great point I would add too, and Jim and I talk about this all the time, but we know that it's 80% of most businesses never sell, although that was their, for lack of a better term, their golden parachute, right? I'm going to sell my business and be able to exit and with a nice chunk of money. At that point, I know, Jim, correct me if I'm wrong, you're pretty darn close to 50% that you're going to pay in taxes on that windfall.
Exactly.
Right. Yeah. Depending on the size of the transaction. So you sell something, you think you're going to sell it for $2 million. You're going to sell your business for $2 million. And you pay $1 million in taxes. Let's say you net 1.1. All right. We'll sway $100,000. But you take 1.1, that's a huge difference from $2 million, the grand scheme of things. Whereas to Jim's point, if you use the strategy he used, you could have been pulling it out through a tax deferred strategy over a 5-year span of time. You could have pulled out a equal amount of money to that $900,000 or somewhere thereabouts. Had all of it tax deferred, not that you wouldn't pay taxes eventually, but it would be tax deferred. You could pull it out and not have to pay that huge windfall at the end when you sell it, as particularly if you didn't end up selling it. If you didn't end up selling it, you don't have it anyway, so you wouldn't have the money anyway. Mm-hmm. Right. And if you did sell it, you got a big tax nut that you got to pay, or you agree to terms where you finance the purchase at the end. And now the issue that you run into is you agree to terms and then they default on the payments and you got to take the business back. So there's not a whole lot of, there's a lot of things that when you go to look to sell a business that can really backfire on you. So having unique strategies that you can capitalize on to try and really win as best as you can and capitalize on the tax benefits that are available to you. That's a super important component.
Yeah. And I can just relate a little story to that. I had a client that they had a concrete company, some small business, mom and pop, and they told me they wanted to retire in 5 years, and they hadn't really saved a whole lot, and the business was one of those businesses that didn't have a whole lot of value if they were going to sell it. So we met there with their accountant and we set up defined benefit plans for them. So what that allowed them to do is to take free cash out of the business, put it into what's the equivalent of an IRA for each of them on an annual basis, substantial amounts of money, a couple $100,000 a piece. Now you have to have the cash flow to do it. And then what that enabled them to do at the end of the 5-year period was to each of them retire with, $1 million plus, and that they could roll into their IRA. And what they ended up doing was literally giving their business to their employees. They didn't have to worry about it. Wow. And it was tax savings throughout the whole process.
Wow. Well, I think that's probably a bit of a wake-up call for maybe some of the people listening to this, because that's not something we're immediately thinking about, or especially if you're in the first year, 2 years, 3 years, you're just worried about, paying the bills, growing your revenue, all those things. And we're maybe not thinking about that long-term play. So I think it's, just a great touch of reality, and hopefully just enough to shock people into, really doubling down on that plan.
Yeah. Just a little shock and awe to get you to wake up.
Absolutely. So,
yeah. And I'll put a plug in there for Jim. Jim does a 5-session training on financial due diligence in your business. You actually, I'll let you give the plug on it, but it's a great program and it's super valuable for small business owners.
Yeah, and I'm doing it pro bono right now. Anybody who wants to do it, I'll just put you in there. It's a group training program. It's a lot of fun too. People show up and you can collaborate with other people, that are in your same boat. And easy trainings to understand, but there again, what we're talking about here is not rocket science. It's just about being reasonable, and it's about being, on top of what you have going on. And that's why it's not that really difficult. You just have to be disciplined enough to do it.
Right. Yeah. Simple, not easy. Right.
Right.
Yeah. There you go.
Awesome. Well, hey, let's jump to there's some big stuff going on at My Biz Coaches. I want to make sure we have plenty of time for it. So let me just quickly recap a couple of key points for our audience, talk about some action items, and then we'd love to spend just a few minutes on some of the cool updates that you guys have. So some of the key points I captured from our conversation today, really, I think the biggest thing that we started out with is effective planning is critical. And then we kind of expanded that to not just the short term, but you got to be thinking long term. Too, you heard it here first. You got to have that rainy year plan. So we talked about that. And then one of the things that's equally critical is, it's great to have a plan, but you need to revisit the plan often and make corrections as needed. We also talked about leveraging finance software to streamline your operations, automate some of those reports, the expenses, all that good stuff. We also talked about utilizing expense management tools as well, and minimizing risk and tax liability. So a lot of things for our audience to think about. So if you're listening to this, you're wondering, hey, how do I get started? What's the first step? Really, the main thing is if you don't have a documented plan for 2023, at least that's year we're recording this, you need to build one ASAP, right? This should be one of the first things you do as soon as you stop listening to us is go build that plan. The second is, again, I love spreadsheets. Eric knows this. I love my VLOOKUPs, all that good stuff in Excel. But if you're still managing your business through spreadsheets, it's probably time to move on, to upgrade, get some nice accounting software. As Jim and Eric mentioned, you can do that very affordably. Let's get you out of paper documents, receipts in a shoebox, and good old Excel spreadsheet, right?
Please.
And then last thing is just making sure you're, have that plan in place for setbacks and for growth. And so that's something we didn't talk as much about today, but I think is important and definitely something we touched on, was not just for the bad stuff, but plan for the exciting stuff too as your business grows, and make sure your revenue, your operating income, all that stuff are planned to grow with it. So important that we look at that. Okay, so let's jump to just some of the stuff that you guys have going on. Actually, all of it really relevant to what we're talking about today. Both of you mentioned this Jumpstart 12. So can either of you tell me a little bit more about that and how that can help maybe somebody who's listening to this really get a handle on their business finances?
I could start.
Yeah.
It's a 12-point assessment, and we have a tool. It's a proprietary software that we call our profit acceleration software. And we're able to go in and do a business assessment for really anybody who's got a business. And we plug in revenues, we plug in gross profit, net profit assumptions. And then we start looking at 12 areas that they might be able to improve on, and looking for minor tweaks in them. I mean, if you can improve your pricing, as an example, by just a small amount, and reduce your overhead by a small amount, you could sometimes almost double your profits, as an example. So we run through each of these areas, and then we give you a report that shows exactly what impacts are going to happen, with assumptions that are very reasonable and doable. And from there, we can develop a timeline that for implementation. And then if you decide to work with this, fine, we can work with you on it and help you and be your accountability partner and make it happen.
Awesome. Yeah. Good summary. Yeah. Thanks, Jim. And I think, again, ties directly to what we're talking about today. So it's a great recap. Eric, maybe I'll target this one to you. One of the other things you have going on is relating to developing technologies, helping entrepreneurs implement developing technologies. We talked about the importance of technology when it comes to our budgets and reporting. So maybe talk to us a little bit about that and some of the stuff you're doing with my Biz Coaches around developing technology for entrepreneurs.
Yeah, I appreciate that, David. So as you know, we did our year-end planning session at the end of December. Coming into January, I was convinced that there needs to be a focus, an opportunity for my Biz Coaches to really kind of lean in on a couple of key areas of business growth, business development for our organization. And one of the things that we really kind of came away with was there's a huge opportunity when it comes to technology. And I'll say AI. We've talked about that a lot in a number of our episodes. But AI, and I think I've mentioned this before. People hear AI and they're like, "Well, what is AI?" Right? And so there's a number of different software platforms that are automated, machine learning. I mean, it sounds like like iRobot or something like that, but it's not. I mean, we're talking right now, or at least what we have available to us right now. It's not quite as advanced, but what's coming is coming at a rate that's going to blow people away. It's going to come at a rate that, I mean, even right now, simple things like we've talked about ChatGPT and the value that can bring to the table in a number of different areas of business. And so we recognize that was a huge opportunity, particularly for the demographic of small business owners that don't or are not in a tech-related play, meaning that they're not already tech-based, right? So the challenge for them specifically is that they're usually more adverse to adopting technology. And what I am seeing more and more, I'm sure that Jim would relate to this, is that as we engage with our clients, one of the challenges that we're recognizing is that the people that are averse to adapting the technology are really getting left behind more and more. So that's where we put a big focus as we move into 2023. I've said since day one when we started My Biz Coaches, digitize and automate. Digitize and automate. Everywhere, if you look at your business with a really, really good filter and you look at it and say, can I digitize this process? Can I automate this process? And if we do that with everything within our businesses, you're going to find there's a lot of cost savings. Significant cost savings. And, we talked about something as simple as, talk about AI, and it sounds really all advanced and everything. I mean, that's as simple as a Calendly calendar that you plug into your website that now does your calendar function and coordinates your schedule so that clients can plug in and schedule their time with you if you're esthetician or a massage therapist or a doctor or a dentist, right? I mean, I can all do it electronically. That's a form of AI. That's what I'm trying to get to. And so the reality is that that's a real simple, basic form that's been out for a while and people are really comfortable with it. And what's coming in the next 2 or 3 years is people are going to be, it's going to be hard for people to adapt to some of the technology. And I can't really speak to all of it, and not to try it out, but we recognize that as that comes, there's going to be a lot of business owners that they don't have the time to learn what's coming, that as it launches and comes out. And we're doing the due diligence on our behalf to do the research so that as those things come out, we can help people, can educate them on where they should make their investment, what would be the ideal software programs for them to partner up with. And I think I had this conversation the other day with somebody, but one of the important things is to start using what's available today, because of they're going to be able to incorporate what they're using today, for instance, like a calendar function or something like that. They're going to be able to incorporate into this new technologies that advance and comes out. So we have made a significant focus on incorporating that into all of our coaching, and we're making a huge emphasis to educate people on what's coming and what we can expect in the coming months and over the next couple of years.
Yeah. No, that's awesome, right? We're not at a spot where we've got, killer robots walking around, but what we do have is robots that can kill careers, can kill businesses if we don't adapt to it. And it sounds like you guys are helping your clients understand that landscape, navigate that landscape, and get started with what's available today, but also future-proof their business. So really smart. And I think it's going to help a lot of people out.
Absolutely.
Okay, last thing, Eric, hopefully I'm not spilling the beans here or letting the cat out of the bag, whichever analogy you prefer. But I've heard you've got a live event coming up. Can you give us just a little sneak peek of what My Biz Coaches has in store and kind of what our audience can expect?
Yeah, absolutely. So April 7th and 8th, we'll have a live event here in Chandler, Arizona. It's a 2-day event, full days each day. We expect to have at least 5, maybe 6 special guest speakers that'll be speaking on key categories of business development, business growth. Certainly I'll be doing some coaching and providing some insight into what My Biz Coaches does, but more specifically, it's an opportunity to bring entrepreneurs together to collaborate on new ideas, which is one of the things that I always enjoy doing when we bring a big group, we get people together. So it's about to educate and provide insight. I know that Jim's working on a presentation that he's going to share with the group there as well. But as much as we want to educate, we have some pieces on the technology component that we just talked about. We also have a speaker coming in, does advanced tax strategy. He was a corporate tax attorney for a number of years, actually did a lot of similar to what Jim did in financial planning, did it for some really big organizations. So he comes at it from a different perspective as well. And then have a marketing genius who he's going to come in and speak to us about not just marketing, but more specifically about marketing and using technology with marketing, or a combination of the two working together, digital marketing and how technology is improving and making the impact there. So yeah, pretty excited about that. But then most importantly is the collaboration of, we're expecting at least 100 people. So bring 100 people together, have the opportunity to make some really good connections, come away with some potential business ideas that you know, as you bring people together, especially entrepreneurs. There's a lot of new business ideas get formulated in those types of rooms. So excited about the opportunity to bring everybody together and do a really big collaboration event, introduce a lot of people to what we're doing, and see what we can get out of that experience together collectively.
Yeah, no, that's awesome. And I know we're a little early, so appreciate you letting me kind of pry some of those secrets out of you and give a little sneak peek. So thanks for that. If you want to learn more about the upcoming event, if you want to learn more about how to integrate technology in your business, or if you want to connect with Jim or Eric, head over to mybizcoaches.com. And if you'd like to learn more about how to up-level your training, your leadership, head over to Train, Lead, Grow to connect with me, and we'd love to help you out. So any parting words for our audience?
Yeah, David, I got one thing we gotta go for here. I'm expecting the audience to help me out here, but we need to help David decide that he needs to be at that live event with us so that he can be on stage with the rest of us. They need to impart some wisdom on leadership development or something, some category that you're really good at, and share that with everybody.
I'll tell you what, Eric, if we get 1,000 likes on this episode, I will absolutely be there. How about that? Help the show, help Eric, help me. It's a win-win-win, right?
There we go.
If you're watching, give us the like. We need it.
That's right. Absolutely. So,
I'll tell you what, how about 100 likes? I'd be happy with 100 likes.
Yeah, there you go. Awesome. Well,
I'm going to get on the phone and start calling everybody and tell them to watch the video and give us a like.
Yeah, absolutely. And be sure to subscribe so you don't miss future episodes. Jim, Eric, thanks so much for your insights today. And Jim, it's great to have you on. So hopefully we'll see you again on an upcoming episode. Thanks,
David.
Awesome. Thanks. And thanks for watching the Biz Coach Show.
Jim. Thanks, David.
Thank you, Eric.
See ya.